Imagine earning money from real estate investments without the headaches of property management, huge capital outlays, or even leaving your home. Welcome to the world of real estate crowdfunding, a game changer in passive income that lets you invest in properties across the globe with just a few clicks. In today's video, we'll show you exactly how to build a steady stream of passive income through real estate crowdfunding, step by step. So, what exactly is real estate crowdfunding? Simply put, it's a way for multiple investors to pool their money together to invest in real estate projects. This could be anything from residential homes to commercial properties and even large-scale developments. The best part? You can start with as little as $500. Real estate has long been one of the most reliable ways to build wealth, but traditional investing requires significant capital and management. Crowdfunding democratizes real estate investing, offering accessibility, diversification, and truly passive income. You get to be a part of high-quality real estate deals without the hassles of being a landlord. For the first step, it's crucial to understand the two main types of real estate crowdfunding investments: equity and debt. In equity investments, you're buying a share of the property and earn a portion of the rental income and potential property appreciation. In debt investments, you're acting as a lender to the property owner and earn interest on the loan. If you want regular income, go with debt investments for steady interest payments. If you're aiming for long-term growth, equity investments are the way to go, since you can benefit from rising property values. And for balance, consider mixing both. A smart approach is to invest 70% in equity for long-term growth and 30% in debt for reliable income. Step 2. Choosing the right crowdfunding platform is essential. Popular platforms include Fundrise, Realty Mogul, and CrowdStreet. Each platform has its own minimum investment requirements, types of projects, fees, and user experience. Here's what you need to do. First, set your budget. For example, platforms like Fundrise allow you to start with just $500, while CrowdStreet is designed for investors with $25,000 or more. Next, research the fees. Fundrise, for example, charges a 1% management fee, but fees vary across platforms, so be sure to compare. Then, check what types of properties the platform offers: residential, commercial, or mixed use. Choose a platform that aligns with your investment goals. Finally, read user reviews and third-party ratings to make sure the platform is reputable and trusted by other investors. Once you've picked a platform, it's time to evaluate specific properties. This is where the magic happens. You'll need to analyze several factors to ensure you're picking a profitable project. 1. Look for properties in high-demand locations. Use tools like Zillow or Redfin to research local property values and rental demand. 2. Check the developer's experience. Only invest in properties led by developers with a proven track record of successful projects. 3. Review the projected returns. Aim for projects with an estimated annual return of 8% or higher, but be cautious of anything promising unrealistic returns. 4. Finally, assess the type of property. Is it residential in a growing suburb or a commercial space in a busy city? Align your choice with your investment goals. Residential properties tend to be more stable, while commercial properties might offer higher returns. Step 4. Diversification is your best friend in investing. Don't put all your money into a single property or even a single type of property. Spread your investments across residential, commercial, and industrial projects, and consider different geographic locations to mitigate risks. Here's how you can do it effectively. Start by investing in a mix of property types: 40% residential, 30% commercial, and 30% industrial, for example. Don't invest in just one city or region. Spread your investments across different states or even different countries if the platform allows. Keep monitoring the performance of each property and adjust your portfolio based on market conditions. Like all investments, real estate crowdfunding comes with risks. Market fluctuations, property vacancies, or project delays can affect your returns. Always assess the risk level of each investment and consider your own risk tolerance. Here's how to manage some of those risks. Market risk. If the real estate market drops, property values can fall. Protect yourself by investing in high-demand locations. Liquidity risk. Crowdfunding investments are less liquid than stocks, so be ready to hold your investments for 3 to 7 years. Default risk. In debt investments, if the borrower defaults, your returns may be impacted. Only invest in projects with borrowers who have high credit ratings. Many new investors make common mistakes that can be costly. Avoid over-concentrating your investments in one area, neglecting due diligence, or chasing high returns without considering the associated risks. Also, don't ignore fees. They can significantly impact your net returns over time. Step 6. Even though it's passive income, you should still keep an eye on your investments. Most platforms provide updates on property performance, financial statements, and market conditions. Regularly reviewing these can help you make informed decisions about future investments. Reinvesting your earnings can significantly boost your passive income over time. By reinvesting dividends and returns, you can take advantage of compound growth, accelerating your wealth-building journey. Activate automatic reinvestment if your platform offers it. This will reinvest your dividends without you needing to do anything. Real estate investments often come with tax benefits. Through depreciation and other deductions, you can reduce your taxable income from these investments. Some platforms provide necessary tax documents to make this process easier. Here's how you can manage your taxes to keep more of your income. 1. Leverage depreciation. Real estate depreciates over time, and that depreciation can reduce your taxable income. Be sure to use the tax documents provided by your platform. 2. Consider tax-advantaged accounts. Some platforms allow you to invest through an IRA or 401k, which can help your earnings grow tax-free. 3. Keep detailed records of all dividends and capital gains to make tax filing easier at the end of the year. Now, let's talk numbers. Depending on the platform and the investments you choose, annual returns can range from 5% to 12% or even higher. Some investors have seen significant gains by carefully selecting projects and consistently reinvesting their earnings. Don't sleep on fees. Most crowdfunding platforms charge management fees, which can affect your overall returns. Always read the fine print to understand what you're paying for. Real estate crowdfunding is regulated by the SEC, providing a level of protection for investors. However, regulations may require you to be an accredited investor for certain opportunities. Make sure you understand any legal requirements before investing. Some platforms offer international real estate investments, allowing you to diversify globally. This can open up new opportunities, but also comes with additional risks, like currency fluctuations and different legal systems. One thing to keep in mind, real estate crowdfunding is a long-term investment. You won't be able to sell your shares overnight, like in the stock market. Some platforms do offer secondary markets where you can sell your shares, but liquidity may be limited. Make sure you understand your exit options before you invest. Some platforms offer automated investment features. You set your criteria and the platform automatically allocates your funds to matching opportunities. This makes the process even more passive. Now, once you've mastered the basics, you can start using advanced strategies to maximize your returns. Some investors focus on high-growth markets or niche properties like data centers and industrial warehouses. Others leverage debt to magnify returns while carefully managing risk. The more you learn, the better you'll get at spotting great deals. The real estate crowdfunding industry is evolving rapidly. With advancements in technology like blockchain and increasing regulatory support, the future looks promising. These innovations could offer greater transparency, lower fees, and more investment opportunities for everyone. Real estate crowdfunding democratizes access to one of the most lucrative investment sectors. With careful planning, due diligence, and strategic diversification, you can build a robust stream of passive income that grows while you sleep. If you're ready to start your journey towards financial freedom, hit the subscribe button. We have plenty more expert strategies to help you make money while you sleep. Don't miss out on our next video, where we'll dive into another powerful passive income strategy.